Don't forget, Kathleen, and we had these conversations back around the 2008, 2009 crisis, that emerging markets turned out to be the bright spot of that crisis, led by double-digit China growth. That is certainly not happening here. This is truly a global crisis.
Is there a risk that this economic pandemic crisis turns into some kind of financial crisis in some part of the world?
Yes, absolutely. And I have called it the quieter crisis because at the moment, as you know, across the globe, many either by law or voluntarily, banks also have put in suspension, have granted grace periods to households and businesses in the repayment of their loans. Now, when the dust settles, some of those loans are not going to be repaid. And I would venture to say a significant number, because we are seeing output declines and already signs of building bankruptcies that are likely to have big consequences for bank balance sheets. Can it spread? Well, most certainly it can spread, but I would highlight that even without cross-border contagion in the classic financial sense, you are getting a simultaneous hit in that, the downturn has been very synchronous, and a lot of the balance sheet problems would also likely be in varying severity, but also quite synchronous. So that is a risk looming ahead.
That brief clip was from earlier today, and it's courtesy of Bloomberg LLP. Similar to before the last major financial crisis, supranational banking institutions such as the IMF or the World Bank, they often release general forewarnings about the deleveraging events and bankruptcies that are about to hit the fan. Dr. Carmen Reinhart was doing exactly that today, perhaps best known for co-authoring this book on international financial folly history with pro-cashless proponent and co-author Ken Rogoff. An obvious overshoot from this still ongoing global viral lockdown, Dr. Reinhart's recent urgent financial crisis warnings have now been headlined and documented by major financial medias like Bloomberg and Financial Times in recent days. In that interview today, she described the size and scale of the global fiat currency creation bailout session going on, akin to wartime spending. And with headlines like this, it looks like we're hoping to refinance our record-sized debts at lower pinned-down interest rates, similar to the way that we pinned interest rates after the World War II debt explosion. Of course, we're not going to be stopping more currency creation anytime soon, so it remains to be seen how this plays out. The private Federal Reserve's balance sheet perhaps is restarting another expansionary phase, adding $76.8 billion this past week. That's the largest since last May. Personally speaking, we're almost at a 1-year anniversary of our weekly SD Bullion updates here. And if we keep up at this pace, an over $10 trillion Fed balance sheet will likely be had by this time next year in 2021. The correlation between a ballooning Federal Reserve balance sheet and a rising gold and silver spot price is very real, as you can see in this 21st century chart. Hello there, on behalf of SDBullion.com, this is James Anderson, and before we go deeper into this week's Bullion Market Update, do me a favor and scroll down and smash that like button so we can rig this algorithm, kind of like many alleged spoofers have rigged algorithms in the precious metals markets complex for the last decade or so of time. Hopefully many of you out there have taken advantage of this price consolidation time frame, prudently positioning your precious metal bets for volatile years upcoming. A bit of bad news, good news this week. First, some negative news stories to begin. Reuters was out rubbing salt in longtime precious metal investor wounds this past week. Firstly, by reminding us that without criminal prison sentences and the firings of CEOs, boards of directors, and executives, commercial bank crime sprees and market rigging as a business model is not going to be deterred. Reuters poured even more salt on wounds later in the week by showing off a 3D rendering of a gigantic skyscraper that alleged racketeer-influenced and corrupt organization JP Morgan is planning on building. slated to open in 2014 for a price tag of as much as 3 fiat Federal Reserve notes billions. The building would be located at 270 Park Avenue, and it is to house about 14,000 employees of JP Morgan. Standing at 1,425 feet, it would be the second tallest office building in Manhattan, behind One World Trade Center, nearly 200 feet higher than the Empire State Building and 225 feet above the nearby Bank of America Tower, according to the Council on Tall Buildings and Urban Habitat. Now, I know architecture is kind of a subjective subject, but to me personally, it looks like JP Morgan wants to have their future headquarters look as if it's giving the middle finger to the rest of the world at all times. Moving on to more positive news, the Silver Institute was out making headlines this week, highlighting that inflows into silver-backed exchange-traded products have nearly tripled year on year over the past 3 quarters of 2020. Globally, silver bullion demand is strongly up as well, with a 65% increase in demand over the first 3 quarters. This was due to strong sales in the 2 key bullion coin markets, the US and Germany, with both seeing substantial double-digit gains over the first 9 months. Silver bar demand has also risen sharply this year, led again by the US and Germany. The growth has been partly offset by weaker demand in India, particularly in recent months where price-led liquidations have emerged. And personally, as I've been saying on this channel for some time now, when India does return with high silver demand, we are likely going to witness a short squeeze that will make the silver price catch fire. Now, just to give you a little bit of a background on history here, if you're looking at this chart, you can see the major rise in supposed silver-backed exchange-traded fund bullion inflows that began in earnest in the summer of 2019, back when I spoke with Ted Butler about this massive 100 million ounce trade that happened over the summer, over a 90-day period. And you can see that in perspective, how tiny it is compared to the recent viral lockdown explosion of silver ETF inflows, capital inflows. So we have a situation now where supposedly 400 million ounces of silver bullion have flowed into various silver ETFs, the largest of which is the SLV, which is custodianed by the JP Morgan. Just to give you perspective, I've shown this picture before on this channel. This picture, you can eyeball, there's roughly 2 million ounces of silver bullion sitting in non-homogeneous 1,000 ounce bars. So according to, these inflows supposedly to silver ETFs, we've had 200 of these amounts of silver flow into silver ETFs in the last 1.5 years of time, allegedly. And the lack of silver mining is already reported to be 7% off from last year, 2019. And I suggest when the final viral lockdown damage data comes in, that number will be worse than currently quoted. All the while, more infinite QE and stimuli are set to launch by the end of Q1 2021. Just have a look, the employment numbers remain terrible. The road to some semblance of a recovery is still long and full of further financial crisis likely inbound. So look, the bottom line here is physical silver is likely headed for a massive short squeeze, in my humble opinion. It's likely why JP Morgan's record COMEX silver pile is again reignited. Their warehouse alone now has nearly 2 times what the supposed silver market cornering Hunt Brothers ever had in physical bullion holdings. Again, too, the sleeping nation of India alone in the 2010s imported over 180 million ounces of silver in 5 of the 10 years of that decade. What's the silver market going to do when that sleeping silver giant returns in earnest? What are silver-dependent companies like Samsung, Apple, and Tesla going to do if they get caught flat-footed on the silver bullion supply crunch to come? Well, my contention is they, other industrial silver users, and investors will all be paying substantially higher prices sooner rather than later. The coming years are lining up well for both gold and silver. That's it for this week. Thanks for coming by. Take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.